Hey everybody, this is Jose Blasco. How are you everyone? We are about to start the session in just 20 something seconds. Please go ahead, if you hear my voice, let's use this time for a sound check. Please go ahead and send a quick message on the chat box. That would be my indication that you hear me well, everything is good and we can start on time. Thank you so much. Sound is good, very good. Thank you, Bojan. How are you? Leslie, Mark, everybody, very good. We just got to the top of the hour. Let me remove the windows that we don't need, maximize the introduction slide so we can start in a timely manner. Let me double check as well that I can read the chat properly so I can get your questions. Mario, how are you? Very good to see everybody. So camera on, let me say hello. How are you, my friends? Good to see you. Nice to get together. Today, we're getting together for intraday trading purposes. So today is the short-term day. We're going to be looking at the markets, looking for short-term opportunities. Many of you are familiar with the format of the sessions, isn't it? For the ones of you are not, we're going to be looking at futures and Forex. We're going to be looking at shorter time frames. And as the name of the session suggests, today it's all about finding opportunities for, let's call it quick in and outs, okay? Quick in and outs with risk management in place, with a specific methodology, with a specific analysis and a collection of tools, okay, as you will see during the session. But anyway, before we start as well, we have a disclaimer. As always, all financial presentations is in it. So I'll read it quickly and we begin. Disclaimers. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that is the disclaimer. The session is now officially introduced, and therefore what you should see on your screen right now is a TradeStation, to be precise, and to be even more precise, radar screen, which radar screen in TradeStation is like running multiple charts at the same time. So every row, okay, every row is like a chart, and basically what we're doing to every one of the rows is we are applying auto climate. Okay, as you can see here on the top, we're applying auto climate. Okay, so what do we have for the ones of you joining us for the first time? We got futures markets on the left, we got Forex currency pairs, the majors in the middle, and we got Forex currency pairs, the minors on the right. Okay, because the minors are less liquid, then we'll have a requirement for market climate of 4-hour time frames. Because the majors are more liquid when it comes to climate, we will deal with also the 4-hour time frame, but also the 60-minute time frames. Okay, and futures, to be honest, are less liquid than Forex, as we probably all know, isn't it? But they are centralized, and that's beautiful. It allows us to drop to lower time frames, even though futures are less liquid compared to Forex. Forex is the biggest market in the world. Well, guess what? Because it's centralized, we can now drop as low as 15-minute time frames for the climate, okay? But as you can see in the middle, the Japanese yen and natural gas are a little less liquid, so we go for 60 minutes. And lean hogs, which is a meat product, is going to be even less liquid, so we're going to draw the line at 4-hour for the time frame to be used. Okay, so anyway, this is everything we've got on the screen. So we have a great diversity in front of us, many opportunities to be analyzed and executed. Hopefully, if all the parameters of the trade meet the rules, then we click the button. And what we're looking for is we are looking for those golden alerts with the word sensible. You can see on the top, it's hopeful. So hopeful means it's not crazy, but it's less probability. Okay, so I will skip those. Okay, I'm going to shoot for sensible opportunities only because, as the name suggests, they are higher probability, they are sensible. But I also need to see color, where we have a gray box, which means the climate is not confirmed. That's why we got the gray color. So then I will ignore those. Okay, I want to find opportunities where we have the sensible indication, but also we need the climate to be confirmed. For example, in Forex here on the top, we got sensible opportunity with the blue box. That means the climate is confirmed to be up. Blue in this case is up, and the opportunity is near a potential entry. So time to plan the trade, and the trade is sensible, meaning that from a climate point of view, it should be a good time or close to a good time to plan a trade and trade in that direction. Okay, so the radar screens here with AutoClimate is a tool. Basically, it's a little bit like a flashing map. It's a tool basically to save time, to just load the charts where opportunity may be available instead of loading a million of charts and then find yourself spending a millions of minutes of your time planning trades that then you discard because certain rules are not met. The idea here is to save time by only looking at the opportunities that are most probable in that initial stage. Okay, so we're going to start, as I said, since on the left with futures everything is hopeful or the climate is not defined. So what we're going to do, we're going to start looking at the pound, US dollar in a 60-minute time frame, and then we'll move to US dollar and pound on the 4-hour time frame. But let's begin first with the one on the top with the 60-minute time frame. And to do that, I am going to bring a trading view in the main screen. Here we go. And what I'm going to do is I'm going to load the GBP USD. Okay. And notice the setup I have on the screen. I used this last week. Okay. And you can see on the top, I got white background charts. And in the bottom, I got dark or black background charts. Okay, why am I using black in the background and white on the top? Well, because I'm using those charts for different purposes, and therefore I kind of want to make my life simple and refer to colors. So what do we do first? We look at the black background, and what do we do there? We check the climate to confirm if we have a go or no go when it comes to planning on a trade. Okay, and once we got a go and the trade is confirmed, well, then we would look at the white background charts to see if we do have a valid entry and stop and everything else in the trade. But, again, we'll start with the bottom charts just to find out if it's still time to trade or not. Okay. So let's begin with the pound. A quick look at the chat box just in case. Let me see. Edward, how are you? Very nice to see you. Bojan, Jose, please check the chart. ES is on bar 4 out of 6 bar up. Okay, let me take a look at the S&P. Oh, here we go. Teamwork. I love it. I see what's happening. Okay, here is 4 out of 3. Okay, 4 out of 3. But of course, on radar screen, super quick, speed of the light. If you look at the properties, edit, AutoClimate, notice that by default, it's loading 200 bars. Okay, and you can load more here and make it equal to your charts. If on your chart you're loading 500, 1,000, so you can make it equal. But if you load too many bars on the radar screen, you are also consuming more CPU power. So normally I like to keep the amount of bars on the radar screen to be less, to save a little bit of computer resources. Okay, and but that's the reason why. Thanks for that one, Bojan. That's the reason why it seems that on the S&P chart, which I'm loading as we speak, S&P futures, okay, we may have a valid climate situation, which is not hopeful. We still sensible, okay. And here we go. Bojan was absolutely right, where we got 4 out of 5.34. Remember, we round up to 6, so 4 out of 6. That means that the opportunity is still valid for us to plan a trade to go long the S&P. And by the way, it seems that we have UFOs at 67 lining up with the EMA. So actually, guys, we got a trade to plan. Okay, we have a trade to plan right now. So let me load the 15-minute time frame, turn on AutoClimate, identify where the target should be. The target is all the way on the top where the gap is. And therefore, we are dealing with 33.88. Okay, so 33.88, that would be the target for the S&P 500 futures. Notice I'm using AutoUFOs applied to the 15-minute time frame, which is the 15-minute time frame is the common time frame that we use for climate and target purposes. And the entry is going to be there, 33.67. Why is that? Well, actually, I want to go to the very top of the box, which I believe is 33. Is 30. Oh, sorry for that. I just hit the wrong combination with my keyboard. So it's 33.67.75. Okay, so that is valid. Okay, now the question is, if I place my stop at 50, 66.5, which is one tick below. So 66.5 is what? Well, 66.5 is the top of the next box. In other words, I need to place my stop below 64.5, which is going to be the same 64.5 I got on the right. So it's going to be 64.25. It's a little bit of a wide risk, okay? But we're going to go for it, given the fact that the market will open soon. Normally, right at the open, we should have plenty of volatility. Not always, but many times it's the case. So we're going to go for that one, okay? So 67.75 right there, that's going to be our entry. So click 1, 2, 3. 64.25, that's going to be our stop, okay? Therefore, my safety target is going to be pushed up by 4 ticks, which is 1 point. And finally, our final target needs to go all the way to 33.88, which is much higher, okay, all the way here. Okay, so here's the trade. You can see a good perspective of it now, okay? New UFO just formed here, okay? So, yeah, so still all good. So 67, yeah, still all good. Okay, so we have a new UFO that just formed here on the left, and here's the risk. Okay, here's the risk. The risk is that price may come to this UFO, react, bounce, and keep going higher. And this is, as you can see, is around 69, where our entry is 67.75. Our entry is lower. So in other words, we are at risk of price touching that UFO and move all the way, and we miss our fill. That's the risk we have. What can we do? We can bring the entry 67 to be 69. You could do that, but then you are increasing your risk. Instead of like 3.5 points of risk, you will make your risk to be like 5.5 points, something like that, which I would say it's probably a little too much. I rather miss the trade than get my safety target too far out, because then my safety target is not working as a safety, and then I would not benefit from it. You can see as well another UFO that just formed in here. So again, we are a little bit of risk of seeing this market react to this UFO on the right or the UFO on the left, and then move all the way. Okay, if that's the case, again, I could understand if some of you want to group all those UFOs and treat all those UFOs like it's a big fat one. This is exactly what I'm doing with the one in the middle, but I would rather miss the trade that group the ones on the left or the right or the left, because then my zone, my trading zone becomes way too wide, and again, that pushes my safety target too far out, and then it's just a target. It's not a safety measurement. It's not a safety measure. It's just another target, okay? And I lose the safety part of my safety target, and therefore I rather miss the trade and try to re-enter later. Maybe the Nasdaq gives me a setup, and then I'll go for the Nasdaq. Okay, so this is the trade. This is the one I just put in place. Okay, and of course I'm using 2 contracts, which is what I do by default all the time, just to have a standard procedure for you, all of you guys. But all of you, of course, you will need to calculate what is the right size for you, given your account size, and also, of course, deciding if this trade is executed with real money, paper money, which all of this, of course, has to do with the use of your capital. And I will not get there when it comes to what decisions should you take. You guys know that we always need to manage risk, which implies the use of stops as well as calculating the right size. Okay. Anyway, so we're just going to be waiting here for this trade to get filled. I want to anticipate a little bit what may happen. 1 minute and 40 seconds from now, we're going to have an update on the climate, okay? An update on the climate. Really, price has been quite flat. And because price has been quite flat, even though the moving average, the EMA, in the 15-minute time frame will be updated in around a minute and a half, I would not expect that number to be significantly different. And therefore, if it was much, much higher, then I may consider another entry. But because the price action has been so flat, I would anticipate that EMA to stick around the same values, maybe just a little tiny higher. And therefore, 67.75 will still be a valid entry given that value. Okay. So in other words, I'm not going to touch this trade. I'm going to monitor it. Okay, so I'm just going to wait 1 minute, if that's okay, before we go check on Forex. I'm just going to wait 1 minute and see if I'm wrong, and therefore the change of the EMA value is significantly different. Because if that's the case, then I will need to either cancel or rectify my trade. But I don't think that's going to be the case. But just in case, I don't want to be overconfident. It's okay to be confident. It's needed to be confident, but not overconfident, because then that would be a form of arrogance, isn't it? And we gotta respect the market. So I'm just gonna watch it here for 20 seconds. We're gonna have an update in 20 seconds or less, depending if my computer clock is in sync with the TradeStation clock, which it should be. But I am not fully sure, so I'm just gonna wait maybe a few seconds of difference for the update to take place. So we are looking at the chart in the bottom here. Here we go. The update just took place. Okay, and yes, the average went just tiny higher at 67.86. But again, if this market goes down, 67.86 is gonna be 67.75. So again, I believe that you guys should be with me in the fact that this trade is still valid, and therefore I'm just gonna leave that order there at 33.67. 0.75 as a valid entry. Okay. Bojan, I took this trade with an earlier setup, got out with time stop for a small profit, taking it again as the setup is still valid. Very good. Perfect. I love it. No emotions, isn't it, Bojan? No emotions. That's the beauty. Okay. Just following the rules. Very nice. Good. So, well, the climate just updated. So while we're waiting for this to happen, let's take a look to see if something else showed up. And it does seem that we do have an indication with crude oil. But in this case, it's too late to the party. 11 candles out of 4. Certainly, this market has been falling for too long. So could be a good time to go ahead and begin looking at the pound, which is the one we were going to do earlier, while we're waiting to see if price is going to enter that price point or not. Okay, we are 2 points away from entry, something like that. We'll just wait. Okay, guys, if I am distracted with the pound trade and we happen to get filled, please go ahead and let me know. Okay, now what do we have with the pound trade? Well, with the pound trade, easy. Okay, easy. We have a no-go on the 60-minute time frame. Why am I so quick to say no-go? Simple. Looking at the climate, we have a thin dot. You guys see that dot is thin compared to the dot next to it. The dot next is thick. The dot to the right is thin. So what does that mean? No go. The climate is not confirmed any longer, and therefore the trade should be ignored. So on the 60-minute time frame, okay? But now, I believe, let me recheck just in case, going back to TradeStation. I believe that we also had an alert on the 4-hour time frame, and yes, we do. It's still flashing an alert here, near sensible 4-hour time frame. Okay, so it seems that the 4-hour time frame may give us an opportunity to execute this trade. Okay, so we're gonna look into that. Okay, I'm just gonna zoom in the 4-hour time frame and see what we've got. And what we've got is indeed one confirmed dot. Okay, thick dot, meaning the climate is confirmed. Is blue, so the climate is to the upside. This climate has been in place for one candle, hence the number one. And when we look at probabilities, okay, as we saw on the radar screen, this climate could be out of 6 candles. Okay, 5.15. We run it up to 6. In other words, 6 times 4 hours. That could be a very nice trade. It's an intraday swing. Okay, meaning that it's intraday but it's swing. It's a patient intraday trade, if you wish, and certainly it may make us happy. Okay, so in that sense, now that we know it's okay for us to plan a trade to the long side, we need to look at what is a good reference price for us to come in. And the reference price is set by the EMA. Okay, you can see price comes to the EMA, bounces, comes to the EMA, bounces, comes to the EMA, bounces, and then it doesn't. Okay, why change of climate? Okay, so the idea here is assuming that when it comes to the EMA, it's going to bounce. Okay, we want to catch that move for the next 5 candles. But of course, we are not hoping this is going to happen just because we would like it to happen. We're going to look for more evidence to increase the probability of this happening. Okay, and therefore, we're going to keep in mind this reference price, which is 3013. Okay, 3013. Let's keep that number in mind. And by looking at 3013, we are now going to turn on AutoUFOs on the top, okay, which is the 21-minute time frame, and we are looking at UFOs located at 3013, which is right there. And unfortunately, we don't have it. Okay, the UFOs that we have available are located at 129.90. That's where they are. Okay, well, they are not located at O3. Okay, they are not located. They are not located at 13. They are located at O3. Okay, so I'm not gonna give up yet. Okay, that 21 minute, we can also switch it to 21 range. So I'm gonna switch to 21 ranges to see if I got any UFO at that price point. And guess what? We do. Okay, we do have a UFO at 130.13 from 13 to 11. Okay, so we do have an entry. Okay, we do have an entry, but if I look down, the next UFOs, notice that they're going to be located all the way to 89. And I'm gonna anticipate this trade is going to be a no-go. And you may be thinking, so why is it a no-go? You got the UFO and you got the EMA. Well, the reason why it's going to be a no-go is because I am always skeptical when trading. And when I trade the Forex markets, just a little extra. Why? Forex markets are amazing, don't get me wrong, but they are decentralized. And because they are decentralized, we are dealing with a spread which is set by the brokers. And different brokers may provide slightly different quotes. And long story short, when you look at a level where on-field orders are located at, going from 130.13 to 130.11, and basically we got 2 pips. Okay, 2 pips. And when you were to look at quotes of certain brokers for the pound, and we don't see it here, but if I turn on, in this case, we are looking at a very, very, very optimistic quote here with the pound. Okay, going from 130.20 to 130.19. So it's kind of like 1 pip. Okay, but again, if I was load this with Oanda, for example, okay, which is a broker, which I'm not gonna say is not valid, it's an okay broker, but certainly pretty retail. And if you were to look at the spread of Oanda, for example, probably you're gonna see a spread there of at least a pip and a half. And this is kind of what we have here when it comes to the depth of the zone. In other words, you may be stopped out because of the spread, even though you are right on direction, if you were to place a stop too close or and again, it's going to be very difficult to be, accurate with entries with such a tiny zone. Okay, basically, such a tiny zone, it's basically implying that we are relying more on the EMA than the on-field orders. Okay, and this should not be the case, because if you have been listening to prior lessons that we conducted, the EMA is an indirect force where the UFO is a direct force. So we want to pair the direct force together with the indirect force to increase the odds. But relying only on an indirect force, it's the recipe to have low probability trades, and I would not want to welcome that. Okay, so if some of you are going to be a bit more aggressive on the setup and you're going to take the trade, hey, let's face it, you do have a UFO there. It's not a crazy one, and you do have an EMA, and they line up, so it's not crazy. But again, being not crazy, I think I made my point about the decentralized nature of Forex and why I'm a little bit more skeptical on this one. And therefore, I do have a rule where when the zone is basically lesser than an average spread in the industry for a currency, so then I would pass. Okay, cool. So anyway, a quick look at futures. Let's see what we got. We haven't got filled, okay? We have not been filled on the trade yet. The trade setup is still valid, okay? At least for another 7 minutes. Hopefully, and this happens often, that right in like 2 minutes, 3 minutes before the market opens, you have a violent move in one direction, we get filled, and then the market starts trading and we get to safety target very quickly. This happens very, very often, okay? So we're gonna be monitoring for this. And if that was to be the case, okay, we will act on it gladly, okay? But in the meantime, we are patient and just waiting for this to be the case, okay, which hasn't happened yet. More opportunities. Let's take a look. On the futures markets, nothing new. On the Forex markets, we got the pound and we got the pound. So nothing new when it comes to the majors. When it comes to the minors on the right, what do we have? We have a potential opportunity with the euro against the Kiwi in the 4-hour time frame for climate purposes. Okay, so let's take a look. Let's go for it. So I'm gonna load EURNZD, loading the Euro Kiwi. And again, remember, we are looking at the 4-hour time frame for this one. It would not be crazy to use the 60 and the 8. Okay, absolutely not, especially if you have a very, very fine broker with raw spreads. But still, it's a minor, so it's not the most liquid currency in the world. So my proposal to you, based on how I have the auto climate set up, is considering to use a minimum of 4-hour time frame for climate for the minors. Okay, we can also look at daily climates. Okay, and we may do that if we were not to find any opportunity today. Okay, so what do we have from a point of view of climate? So let me zoom in. So climate, what do we have? Well, first of all, we have a thick dot and it's blue. So the climate is confirmed to the upside. This climate has been running for 4 candles. Statistics for up markets. Okay, so we ignore the value in the middle. For up climates, statistics suggest 7, 6.8, we make it 7. 7 candles, and this is candle number 4, so we can still come in and enjoy a 3/4 candle move, okay, in that direction. Okay, so we are going to be looking at 168.79 as a reference price, expecting this market to come around this price level and from there bounce and move the way I just explained. Okay, of course, we're not going to hope for the best only based on the EMA. It's an indirect force. It's powerful, guys. Okay, notice how beautiful that was. Okay, and it happens many, many times. Okay, you can see the reactions to the EMAs all the time. Okay, but again, when it's very highly or higher probability for this to happen, really is when you have the indirect forces lining up with the direct forces. Okay, so what are we gonna do? Turn on AutoUFOs the same way we did before. Okay, and see if we got anything around 68.80. Okay, and hey, unfortunately we don't. On the 21-minute time frame, okay, we don't have anything. And there is a classical, support, that technical analysis with call. So you have a classical support and an EMA. So hey, we may see a bounce, but we don't have evidence of on-field orders. We don't have UFOs at that price level, meaning that we don't have a direct force in our favor. Okay, so next step would be to check the 21 range time frame and see if we got anything around 80. Okay, so let's see. Do we have anything around 80? We do. Okay, around 80. Let me maximize this so we can analyze better this chart. Okay, what do we have? So we have at 80, we have 80 to 78. Okay, so you would say that's only 2 pips, it's not valid. Okay, I get your point. But now if you take 78 and you add 5 pips for the breathing room for stop, we now fall into 73. Okay, and that's another 2 pip. Okay, but basically now you have 2 micro pile of orders that may help the trade to work. Okay, so that's a different scenario compared to the one we had before. You probably remember the one we had before only had 1 UFO. There was no UFO below. Actually, there was one, but it was so far down. In this case, it's 5 pips away, and therefore you could group those 2 like it's a thicker zone from 80 to 71 and place your stop below. And in somewhere in the middle, you have the EMA, right? And therefore now we do have some direct forces lining up with indirect forces. We may got something here, okay? Let me see. Yeah, we still got 3 minutes to go. So again, we got 80 to 71. By keeping this in mind, I want to go back to the 21 range, to the 21-minute time frame. I want to remind myself of where was the next pile of on-field orders, which is 51. Okay, so we said from 80 to 71, we got those micro pile of orders, which coincide with that technical support that probably many market analysts are identifying, and that's why we may have on-field orders there. Okay, you can see turning point in the past, turning point in the past. So that may be why we have pockets of on-field orders at this point. So all of this may help you to be a bit more comfortable. I mean, we don't need to look left, to be honest. I just added a little bit of information out of an observation, but really we simply rely on the UFOs because they are plotted for us without having to think about it, and that makes us more objective. Okay, so 80 to 71. If I add a stop 5 pips below 71, that's gonna bring me down to 66, and 66 is somewhere here. So that 51 UFO doesn't come into play. Okay, good. So we have a potential trade. but I have less than 1 minute for the market to open. So I'm going to move to futures, and then I'll come back to the Euro Kiwi to complete this trade, because we may get filled right at the open. Well, we just got filled. And here we go. So we just got filled, okay? And now I would like to work with you on this trade, so you know how to manage it, okay? So the market will open in 20 seconds, okay? It'd be nice to see a little bit of buying pressure right at the open, okay? The beauty of these trades, I love this. You heard me say that a million times. Get filled right before the open, because if we're wrong, we're gonna be stopped out immediately. And I love that, because then we're gonna replan other trades and we don't waste time. You don't stick around in a trade that in the end will be a losing trade, but you wasted an hour of your time. So I love these trades that get filled right at the open, because if the trade ends up working, we get to find out very, very quickly, okay? So, and if it doesn't, we will find out very quickly as well, okay? So let's see the little fight that will happen right at the open is happening now, okay? This is candle number 6 in the climate, okay? So it was still a good time for us to enter. Apart from the little fight that is happening right there, I am also zooming in the 2-minute time frame, because apart from everything I said, we are also now activating our time stop, okay? Time stop, how do you call it? I'm missing words here, guys. The time stop trade management methodology. Here we go, which implies that if after 6 minutes, three times two, 3 candles, right? If after 6 minutes we didn't reach our safety target, then we will just go ahead and get rid of this trade. Hopefully for a small profit, maybe break even. We'll see what's possible at the time. But if we didn't get to the safety target quickly, it probably means that a lot of things that are the rationale behind this trade setup are not being a reality, and that's why we are not getting to the target. Okay, so it seems that we're having a powerful push there. We are 3 ticks away from the safety target. Here we go. We just reached safety target, so we are out of risk. A new UFO form as well, 67.5. So we're gonna go ahead. Okay, we will go ahead and move stop to 67.25, which is right there. Okay, so no matter what, this trade not only will end up with a good as a good experience, okay, but on top of that, no matter what, not only we are breaking even, which is the worst case scenario. On top of that, by moving the stop like I just did, because of the new UFO form, which is also part of our trailing stop methodology, isn't it? So apart from that, we are also now in a net profit no matter what, because we made around $200, and if we get stopped out on the rest of the size, we're gonna lose 25. So $100 minus 25, $200 minus 25 is around $175. No matter what, that's gonna be collected. Okay. Of course, we are a little late in the climate now, 6 out of 6. But again, that's the direction of the market. The probability this will continue for a very, very long move is not so high, because it's candle 6 out of 6. I would actually be amazed if we reach 33.88. I would say based on probabilities, I don't think we're gonna go there. Okay, but sometimes the market is really pushing hard, and we will allow ourselves the luxury to be in the market with no risk to see if that happens or not. In the meantime, we're gonna be trailing stops as new UFOs form, if that is the case. Notice how this red UFO is being challenged now. It was dark red, now is light red. So you can see on-field orders are being filled. The climate is up, so that UFO may be taken away. If that UFO is taken away, we may have a green UFO show up somewhere here on the screen. The red UFO is gone. It seems that the battle took a lot of buy orders, so the app is not plotting anything green as of yet. So no time to move stop yet, okay? But if a green UFO shows up, we will immediately trail stop again, and again lock in more profits as we allow ourselves for the move to happen, okay? I would say it's looking quite good, but again, the $200 we got in the pocket right now are actually a danger of the complete opposite to happen, unless a UFO shows up. Okay, so it would be really, really needed for a UFO to show up. If we were to reach 400 with no UFO form, we would trail stop to 200. This is our too fast, too far methodology. Here we go. We just got a UFO forming here at 70. So the stop is going to be trailed now to 69.75 right there. Okay, so the stop is now collecting another $100. No matter what, this trade is gonna produce $300 of profit. Even if we don't reach the target. Okay, so looking good. Let me zoom in so we get a bit more visibility on what's going on. Okay, again, another red UFO that was on the screen that went away. So that is a lot of buying pressure, getting rid of sell-on field orders, or a lot of large market players changing their mind when it comes to, hey, I wanted to sell. Oh, wait a minute. The right side in the market is not to be short, is to be long. And they are removing their orders. And this may allow the climate to expand and propagate beyond what statistics suggest, which is 6, which is, basically 10 more minutes moving in that direction, okay? Because we are 10 minutes away from candle 7 to begin, okay? So again, if we reach 400 with no other UFO form, we will trail stop to 200. Okay, but this hasn't happened yet. 400 will be 75, which is more or less here. Okay, 75 or 75.5 is more or less here on the top. Okay, so let's see if a green UFO shows up. Okay, and how many of you are in this trade with me, guys? Because I'm spending a lot of time in this chart. I wish to also move into Forex or other futures markets and also look for other trades. But certainly, if a bunch of you are in this trade, I would certainly give priority to sticking around with you guys and help you manage the trade as it progresses, because certainly some of you are veterans of our sessions, but some of you, of course, every day we have more and more members in the community, and some of you are newer to trading, and I want to be 100% supportive of everyone in the community. Okay, so yeah, so you can see price action is cooling down. Statistics are there for a reason. We are getting closer to the next update on the 15-minute time frame. The more time passes, the less likely it is this will continue. So we really need, to be honest, we don't need anything. This trade is going to be nicely profitable no matter what. But in order for this to continue, we really need UFOs to show up, because if not, it's no way it's going to continue, given the fact that we are a little late on the climate already, candle 6 out of 6, isn't it? So notice how sell-on field orders are kicking in. So my observation about the climate is not only mine. Large market players use statistics in their decision process, and we may hit the stop any moment if this continues like that. So we'll see what happens. But if we do, that's it. We're out of the trade. The trade concluded with a $300 profit. So if you've been executing with me, guys, good job. Very well done. And if you have not been executing, hopefully this was a valid example to open your eyes to the process and what we do and how we do it. And how you give yourself the opportunity to enter a market in a safe manner. Okay, cool. Feel free to ask or comment if there is anything for you to ask or comment on as I go back to the red screen to see if other opportunities are available. Okay, so in the futures markets, we have a flashing alert on gold futures, 15-minute time frame. This is a near sensible trade. I'm a bit concerned about the number 6 and 6. Okay, so I'm not sure we are still on time, but let's take a look at gold. So turning on gold, I'm gonna go back to my browser, and the reason why is because I am using, as you can see, bar chart. Why am I using bar chart? So I can look at the metals and make sure I'm using the right symbol with gold. You guys are very, very quiet. Okay, I don't know if the S&P trade was a bit too fast and I got you very busy, and you are, you and yourself with your business. But I would really like to get a bit feedback from you guys, even if it's just to say all is good. Okay, so I would love that. So what do we have with gold? We got the J letter. Higher figure here is that row, which coincides with the J. So yes, when trading gold, we should be using the J. Okay, the J contract. So what do I have here? I have the G. Okay, so that means that I'm going to have to change that to GCJ20. Thank you for that one, Bojan. Thank you for that one, my friend. I would have missed it without you. So what do we have here? So we have when it comes to climate for gold, 6 candles out of 6. Okay, so basically we still have 5 minutes to get into a trade with gold, and gold is coming to where the average is, okay, which is 1593. But unfortunately, 1593, 1593, 1593, there is no green UFO. Okay, so we do have a defined climate. Okay, we do have a defined climate, but we don't have the UFOs. Therefore, there is no option for a trade setup on gold. So I'm just gonna close and continue my research for market opportunities. Okay, I'm gonna close the S&P as well. We don't need the S&P chart, at least for now. Good. And again, I'm not sure if maybe I'm having a little problem with updating my live chat because I don't see any feedback from you whatsoever. Not even to say, hey, all is good. So I'm just gonna do a little reset on my end because a bit surprised that you guys didn't type anything, and I want to make sure the chat is working so I can get your questions as well as you define what is the support that you need. Okay. Oh, got it. So my chat box was not refreshing, so now I get all your feedback, guys. Thanks for that. So Mark, you're in. Edward, you're in. Ellen, you're in. Mario, you're in. Leslie, you're in. Mark, in live. Marius, yes. Bojan, you were not in it. You were at the open. Got it. Brandon, watching. Mark, you got stopped out. I guess that what you mean by stopped out is that you moved the stop and then you got stopped out. So that's a profit. I'm sure you did. Mario, good trade. All good. Reach my target for the day. Thank you, Jose. My pleasure. Leslie, all good. Ray, all good. Scanning Forex. Bojan, absolutely. Teamwork is critical. When not here, join us on the Discord, folks. Yes, absolutely. Irwin, very good, perfect. I was kind of surprised that I didn't get any feedback from you guys. I'm like, what's going on with my chat? And yeah, I'm happy to see that you guys were teaming up. We always talk about teamwork, and I'm very happy with that. Okay. Anyway, back to trading. So what do we have? Well, first we need to conclude the trade with the Euro Kiwi. Okay, and the Euro Kiwi is coming down. I want to remind you. Okay, I want to remind you that we said that on the 21 range time frame for the Euro Kiwi, we had a potential entry defined from 168.80. Okay, so 168.80, which of course you probably remember, right? So we take 80 and we make it 4 decimals, and that's going to be 81. And because it's a buy order, we add 2. So that's going to be 83. Okay, so the entry will be 168.83. So let me write it down here. So 168.83, that would be the entry. The stop, remember, we said earlier, is going to be below 71. Okay, so again, same story. 71, we're going to have to move this to a 4th decimal place, and because it's going to be a sell order, so we'll run down, not up, but down. So it's 68.71, and because it's a stop, then we're going to add additional 5 pips of breathing space. So that's going to be 68.66 to accommodate for the decentralized nature of Forex trading. And that's 17 pips of risk. Okay. And what I haven't found yet for the Euro Kiwi trade is a target. So let's do that now. Turn on AutoUFO on the 4-hour time frame. We are looking for red UFOs. Oh, wow. Red UFOs are all the way at 173.73. My friends, too good to be true. Too good to be true, because basically you are risking 17 pips to make 490 pips. I'm going to have to ask for just 1 second. I need a sip, guys. Sorry for that. So that's a 28 to 1. And you heard me say that a million times, isn't it? If something looks too good to be true, it may be too good to be true. And the job of a trader is to always be skeptical. Now, it doesn't mean that when you go sleep, you have a difficult night or you don't risk well. That's not what I mean by being skeptical. And by the way, what a bad joke I just made, isn't it? Give me a second here, guys. Something's going on my end. My screen went all the way black. So all my monitors went black. Interesting. Oh, I'm not sure what just happened here, guys.